Welcome to Elementary. Hot topic. So today we're talking about mortgages. And we've got a couple of good topics we're going to cover. And for those of you who joined me today, I hope you're going to love what we have to talk about. Now, I did invite some of you to send questions in advance if you were unable to make it. You know my guests. I've interviewed them before, and I can't wait to get started. There you are.
Hi, Jacqueline.
Perfect. Hello, how are you?
I'm well.
That's
I'm well. Happy
good.
Monday.
Happy
How you been?
Monday. I'm good, thank you. Yeah, yeah,
Having
it's
a good
good.
weekend? I know you were busy with a lot of showings that you had booked.
A couple. People are still seeing. They're taking longer to buy, but they're seeing, which is
Yeah,
yeah, so which is great.
that's what we want to see. Yeah,
Yeah.
the more they see,
So
the closer they get to the next home. So
yeah, no, for sure, which means, there's some confidence and some sentiment and people are coming out and, which is great, right? So there's the one thing for sure is there's quite a bit of choices. Um, they have some choices and they have some muscle
yeah, yeah,
to negotiate a little bit, right? So
of
let's get
course, yeah,
started. Let's introduce yourself
yeah.
to our guest.
Well, first of all, thanks for having me. I
Yeah.
love elementary. Love the guests that you bring on. I am Manny Najafi. I'm a mortgage agent level two, currently with North Power Mortgages Inc. in Toronto. But I do service all of Ontario, and we do have clients all across Canada, depending where things need to be done.
Yeah.
So my focus primarily has been Ontario mortgages. The hot topic these days is obviously the rates and the Bank of Canada rate announcement on Wednesday
Yeah. Yeah.
that everyone's been calling me about. Yeah, right now the market is 90% priced in to have another rate drop on Wednesday.
Yeah.
So we're potentially looking at another 0.25 drop
Yeah.
on Wednesday. So
Yeah.
that's the big news that
Which
I
is
want to share.
exciting, right?
Yeah,
Because the way I look at it is, a 0.25, no one's going to go out and be like, hey, let's just, buy the biggest house on the block. But one thing it's going to really, set the ball rolling is a confidence piece, right? People are going to feel like, hey, um, maybe there's some downward direction for this mortgage, right?
yeah. You're absolutely right. I mean, what happened last time when there was a small drop, you saw a flurry of people that were just waiting on the sidelines, ready to go. Most of these people have their pre-approvals ready and done. And the 0.25 is not going to make or break their payments. Obviously, a 0.25, it's not a whole lot in terms of savings. It's definitely not going to make you make a decision that now is the right time to get in. However, what it does do is that it gives you confidence that the market is slowly rebounding.
Hmm.
And if nothing goes crazy, we're still headed in the right direction, right? We
Yeah.
saw back in May, there was a little blip back up in inflation numbers, but for the June numbers were down again. And right now, Bank of Canada is sort of their hand is being forced into dropping the rate by another 0.25. Right now, the market is soft. We do have a soft labor market, particularly. We have weak
Mm.
economics coming out of most sectors. So and companies are not investing enough. They're not hiring enough. There's not enough projects being done so that the economy kind of keeps rolling. So typically, the only hand Bank of Canada has, it's their monetary policy, is by increasing or decreasing rates. Right now, their hand is sort of being forced into reducing it, but we're still headed in the right direction, right?
Yeah.
So most economists are calling for another 0.25 drop. In fact, right now we have a 50-50 chance of another drop in September as well for the September 4th.
Yeah.
So we could be potentially by the end of the year, we could be in a really good, rate environment. And
Yeah.
the confidence that's been building in the economy, are you going to see, I think, a flurry of people coming into the market, and that's going to cause probably even more multiple offers on the limited supply that we already have.
I know.
What are
Yeah,
you
I
seeing
don't.
there in terms of supply?
The supply right now, I think there's a lot of sellers putting their houses on the market, right? I think what had happened is, you know, see, what you try and tell people is let's talk about what what is really important to you, right? What do you want to see happen? Let's achieve those goals. And a lot of times, when people are of this mindset that we're just going to wait, we're going to test the market, we're going to time the market, that almost doesn't time out well, right? So I noticed a few people were saying, well, we're going to test time the market and we're going to wait until the rate drops and then we're going to put our house on the market the week the rate drops, right? Well, we saw a little bit of activity in a lead up to that,
Yeah,
and so in a lead up to the rate dropping in May, there was a bit of activity, right? And but then, really, after that, it's like, crickets, right? The rate drops and
yeah,
no one's coming out. Like, I mean, I'm showing homes, but people are not saying, "Oh, let's put in an offer." Like, people are like taking their time. They're looking at homes. I'm showing a few
yeah,
extras. You know what I mean? And people want to negotiate. But that's what I'm also
absolutely.
finding a little bit of a tricky. I want to tell people, like, if you have a question, make sure you drop your question either in the comments we're watching or in the question icon. Either way, it'll be great if you can, if
Yeah,
you have questions and you drop your
I can't
questions.
even see any of the questions or whoever's on, but obviously, I think you're seeing it on your side. But I do agree with your comment about timing the market. I hear that a lot, and I ask people, what does that mean? Right? Because what are you timing it for? If you're timing it for the rates to drop, well, everyone else might be waiting for that, right? If you have to look at it based on your own goals, like you mentioned. Like if it's really hard for you to carry the property, and that's why you are looking to sell it, obviously you want to max out the price that you want to get, but you have to look at your own finances and say, hey, can I still carry this property another 2, 3 months? Because if you're waiting for the next drop, what's to stop you from getting a little bit greedy and saying, hey, why don't we wait again till September? Why don't we wait again till the next rate or after that? How long is that cycle going to continue? So I think that what you can do, the best way you can time it is to see what your goals look like. What do they line up with? What's your goals in the next 6 months? If you want to get rid of the property to open up some cash flow for your other bills, well, selling may not necessarily be the best way. You can have someone else look at your finances and say, hey, no, if you consolidate a few things,
Hmm.
we
Hmm.
might be able to keep this property, keep that asset that's generating some value for you, and look at it. So when people say I want to time the market, I'm like, what does that really mean? What's your end goal here, right? And then based off of that, then we can extrapolate and say, hey, okay, what do the finances look like? What are the overall goals? And let's see how we can make them line up.
Yeah, yeah. No, for sure. And this is the thing too, right? I always say to people, have you had that conversation? Have you shared your goals? Because see, there's two parts to the story. I think a lot of times people, on one hand, randomly pick someone to buy their largest asset. And I'll say that randomly. Some people will do a little more digging. They get the sentiment. They feel comfortable with you. They get it that you're not out to rip them off. But some people are just randomly picking people who are not doing what it's in their best interest, right? Like, I mean, at the end of the day, our ethics are strong. As a realtor, it's in the best interest of the client. That's how we have to work. It's not about me. I'm gonna eat whether you buy from me today, you buy from me tomorrow. It makes no
Yeah,
difference, right? Um, and that's where I think a lot of people are just blindly just going um, and not really digging a little deeper and figuring out what are their goals, what are they looking to achieve. Is it the right time for them to sell their home, buy another home,
yeah,
or should they wait a little bit? Like, what are they looking to get, or should they refinance, or should they do X amount of whatever? So that's where I think, um, people have to get you have to trust the person you're working with, right?
yeah,
And if you trust them, then both of you on the same page, you're going to head in a really, really good direction. But the one
yeah,
thing I am noticing, a few things that I'm noticing, um, is we haven't seen these homes come on the market for a long time that have um, the power of sale attached to it,
yeah.
right?
We're
And
seeing quite a bit of, yeah,
yeah, and I feel like people are not in those cases, not really looking ahead and really falling behind. Like I'll give you an example. I showed this property and I showed this property multiple times. I showed it the first time and the homeowners were trying to sell it and they were really kind of way off the mark on pricing. And they could have sold it and really kind of got out of it. But then their property got taken away and put on the market.
Yeah.
And, now they have to get you market value. They can't just give it away for a song.
No.
But, there's a little bit of a reality, right, on that piece. So, and that's a good segue to say to people like, hey, if you're struggling, what do you need to do if you're struggling?
Yeah.
Right?
Yeah. And I mean, one of the first things I do is when it comes to finances, aside from the licensing and everything, I have a responsibility to the clients to pick what's best for them first over my own personal gains, right? So, for example, I could do a mortgage, get paid on it, but it's not necessarily the best thing for the client. Down the line, they're going to be cursing me, even though I could be long gone. But I'm not looking for that. I'm more interested in the long-term gain. So, and the long-term relationships, because I have clients that come back to me year over year. So number one, if you're unscrupulous and you're not doing the right thing for the client, oftentimes they may get screwed down the line, and that just means there's no return business. Number two, that gives my industry as a whole a bad name. Right? There's bad actors in every industry. We know, right? Whether you could be a doctor that does unspeakable things to clients. We've seen that a million times, right? So I look at myself as face of the industry. I look at myself as the face of our company, who I represent, my colleagues, and everyone else around me. So I want to make sure that I do the best job that I can for them and represent myself. And thirdly, I love when clients come back to me or they give me a referral. That to me is a stamp of approval that, yes, you've done my job. And oftentimes I've turned down business because I say, hey, it's not in your best interest. You're happy to do whatever you want with your life, but my reasons are A, B, and C. I give them a reason to trust me for a specific goal that we have in mind, right? Oftentimes, people can say yes or no, or there's a lot of people saying yes, yes, yes. I want to get it done. I'm in sales. I got to get clients and I got to do it. But you have to look at it and do the right thing for the client. And one of the things that I do is I look at their finances as a whole, right? Buying a home is one thing, right? But if you have car payments, if you have children payments, if you have other obligations, other properties, in fact, or other properties that are coming that are not necessarily in your balance sheet right now. So because there's a lot of people that have purchased pre-construction before, it was a different environment in 2019 or 2020, and they're coming up for closing right now, and they have a renewal coming up, right? So I think about that ahead of time. I mean, if you have a renewal come, how are you going to qualify for the other property that's closing in 4 months after that? Be honest with me, give me the full picture, let me figure it out, and then I can lay out our plan and say, hey, if you go with option A or B, sometimes there's only one option. We have no choice, but we'll lay out the groundwork about why, and then look at the long term. If we are stuck with only one plan, okay, so what do we do in 2 years' time or 3 years' time to turn things around so you're not in the same situation again? Right?
Yeah. No.
So it's just a matter of talking to the client, asking the right questions, and getting to know the real big picture of what's happening.
No, for sure, for sure. With regard to CMHC, what are you seeing? What are you noticing? What are you seeing with CMHC?
So CMHC, so obviously they took away some of those. They took away the first home buyer incentive program, where they were essentially coming in as a part owner. So they took that away. They realized that the program that was brought in, it wasn't producing enough for it to be worthwhile. What I am seeing is less and less people are going in and doing a high ratio mortgage. Right. So a lot of times people will do a high ratio mortgage where they put down less than 20% to get into a home. For the homes that they're looking to get into, the lowest amount that you can put is 5%. And that's for a $500,000 condo, right? There's not that many of those that are around where in the area that people want to live at.
Unless you're in Barrie. Unless you're looking in Barrie or somewhere further out.
Elsewhere. So from my experience, CMHC is basically saying that the numbers are getting less and less, right? So we've seen there's less and less condos being bought, right? Where in fact at 27-year lows, from what I'm reading. So CMHC is often being used for anything less than 1 million. And from my experience, I'm seeing more and more people buying and borrowing down payment or getting a family gift upwards of 150 to 200,000 to get into a property that's actually worth that money so they can build and grow a family. Anything less than that, we're seeing the numbers actually going a little bit lower and lower.
Yeah. Well,
Yeah.
you see, the thing with the condos is this is what I'm noticing. A lot of the condos were not, built to suit growing
No.
families. They're really the newer ones. They're like shoe boxes in the
Yeah.
sky, is what they're being called,
Yeah. They're
right?
for end users,
Um,
essentially.
yeah, and
Like
so
a single couple, maybe a baby at best if there's a small den. But the areas that you're talking that
yeah.
are being built are not really family friendly,
Yeah.
right?
And really they're catering to investors, even though the investors are, will try and rent it out. But when you have something that's like 300 square feet and you're not a single person or maybe even a couple, it might be a little tough. I mean, us women in our
Mm.
shoes, but jokes aside, like I mean, those small little condos are very like extremely small, and so a
Yeah.
lot of people are not wanting to get into buying it. And that's what's happening. Like a lot of the investors are looking for the cheapest, smallest. And when I say cheapest, they're not really cheap prices because some of these new units came in at a
I'm
very high
not cheap. No.
price per square foot,
Yeah. They're looking for good return on investment. And when you're buying a tiny home that you can't, I mean, you can't, like the rent that you're going to get from it is not going to even come close to the mortgage payment you're paying for right now. So a lot of times, some of the investors are saying, hey, you know what? If I spend a little bit more, I can get a townhome that I can get twice as much rent. So some of my investors, clients that they're looking, they're primarily focusing on freehold townhomes or even semis because they're like, you know what? At least I can rent that out for like 4K, 5K, maybe come close to making my mortgage payment, so I'm not out of pocket too much.
hmm
And in fact, there is actually a limit on how small a unit can be for it to be mortgaged properly through one of the banks, right? So some of these micro units that they're being built or suggested, some lenders won't touch them. So you might be stuck with another alternative lender that might the rates are a little bit higher, which makes it even less likely where an investor can make money. Are there good deals to be had? Of course, absolutely. There's tons of good deals. But right now, the condo market is going through a bit of a shift where there's a lot of supply, a lot of people who are investors, they've already sold their secondary units. There's a ton of pre-constructions that were delayed that are hitting the market. So it's almost like a perfect storm where all these things are combining where the condo market is sinking. And some of those people, like I said, my clients are looking and saying, hey, if I just up my budget by 100K and put a little bit more down, I can get a townhome rather than this small condo.
Yeah,
Right.
no, for
Right.
sure.
And just,
And
yeah.
plus with, with the fees and stuff, right? When you take
Yeah.
into consideration what some of the fees are, it's like, each $100 is like $15,000 in
Yeah. Yeah.
mortgage, kind of
Yeah.
like, you know what I
It's
mean?
like,
I'm not, don't take my
it's like,
numbers. I'm not the
it's like
mortgage
having an extra
broker.
car payment, honestly.
Yeah,
Like some of
yeah,
these, I've seen upwards of $700, $800 if the
yeah.
building's a little bit older. That's, $800 an extra a month. Like I know there's amenities, there's things to get from it, right? But on the face of it, you're still paying $800,
Just
or
qualifies
700
you
or
for
600.
less,
Yeah.
right? Yeah,
Right.
that's the
And
thing.
those numbers actually go into your mortgage calculation. So
That's right.
when I was running, so I have this perfect example where I think I was running numbers based on a $500 a mortgage, $500 per month. The difference in a mortgage where you qualify for, one of them was about 550, the other one was about 650. So
$100.
that alone can
Yeah.
just tell you, like, yeah, every 500, I think reduces, every 400 reduces your purchase by about $100,000
Okay.
is give or take those numbers.
Significant.
Yeah,
Yeah.
yeah,
Significant.
absolutely.
Yeah,
That's a
and
downtown condo versus a
yeah.
uptown townhome.
Yeah. And you know what I tell people? Well, if you're planning to, let's say, own it for 25 years, the life of your mortgage, right? 25 years later, you'll continue to pay that, whatever that amount is, and it increases, right? That's not to say you shouldn't buy a condo. All I'm saying, because really you may be starting out, but I think the market's shifting in a sense that
Yeah,
very soon people are going to start out in the step by step like they used to before. I think right now we're in this living up with the Joneses era where everyone is like hey, my friend's got this house. Like I have
Yeah.
the same thing. You know, a client will come to me and they'll be like, yeah, I'm looking for this, and it's like a small little condo or something to that effect.
Yeah.
And you know, before long, they're like, oh, Jacqueline, can you show us something? And I'm like, really? Do you need that right now? But like, you know, I'm not telling you what to buy, but
Yeah.
at the same time, it's like kind of like take a step back. Let's, you know, um, do it, go a little slow. And sometimes they'll be like, no, no, but my friends got this, you
Yeah.
know, like,
Yeah.
so it's almost like
It
they have
kind
to
of
fit in
goes
or
back
something.
to your discovery question. Like, why are you doing this? Are you doing this to
Yeah.
invest? Are you doing it to build a family? What are you doing? Like, if you're doing it to invest, then yeah, there's tons of good properties out there. The foreclosures that you mentioned, sometimes you get
Yeah.
a good deal and it makes
Yeah.
it worthwhile. If it's an end home, then I'd be like, listen, this is going to be your starter home, right?
Yeah.
There's no dream home anymore where you get the house, you get married, you get the big house, 5 rooms, white picket fence, and the whole 9 yards, right? That doesn't really work in our environment anymore. In Toronto, you're buying a small condo as a couple, you're refinancing it or selling it, getting a nicer, larger down payment, maybe some gift from a family. Then you buy a home to start your family, your first kid, second kid. So you kind of have to do it in steps right now. But I think it kind of goes back into your original conversation about have those conversations with the client, get to know
Yeah.
your client, do your KYC, and then figure out what it is that you're trying to achieve, and not just buy a home just because we have to buy a home because our cousins bought it or our neighbor bought it,
Yeah.
right?
Yeah.
But everybody, I am a strong believer that everybody should own a home.
Yeah.
You
No,
should have
absolutely.
something that you call a home, whether it's a condo, somewhere where you as soon as you close the door behind you,
It's
it's yours and it's your castle. Whether it's a small town
yeah.
condo or a
Yeah.
big mansion, I think you should own. It's a good investment to have. Um, but you got to do it the right way so that you are actually looking and you are building value in it, right? Right?
Yeah. I just did a video on that saying, like, I'm not a gambler. When it comes to my home, it's off limits. Like, I am not a gambler with my home. My home, I mean, it's not perfect. It doesn't have everything I want, but it doesn't matter. It's my home.
Right.
And the way I look at it is, you know, no one's going to tell me, hey, by the way, I want to, you know, um, I want to sell my house, so you need to move out, or I want to sell my condo, you need to find another place to live. You know, people think, hey, I got lucky. I'm only making $1,500 rents, right? But what happens when you're planning, your budget is $1,500, and now your landlord said, I'm really sorry, but I want to use the condo for my own use. So my parents are moving back, or my daughter is moving back because they can use it for those categories, right?
Yeah.
And then what happens? So their kid is coming back because now they're grown up and they're moving back in, and your $1,500 rent is not going to cut it anymore. So you're going to have to go out in this real world and find rent for 24,
Yeah.
2,500 for a one bedroom. Um, and that's $1,000 more than you budgeted. So, but at the same time, you could be paying the 2,500, but you've had a plan of how you're going to pay off that house, whereas you've been renting for the last little while. Now, in some cases, I think people have no choice. They have to rent. But I do think you need to be putting a plan of action. Like, I think immigrants are by far the most, the, the, my clients that are immigrants, absolutely. Like, it's like they've got like a 1 to 3 year plan. They come in
Yeah.
and they're like,
Yeah.
hey, we're coming in, Jacqueline, we want to buy a house. Like, how can you make it work? I mean,
Yeah.
you
Yeah.
know, I mean, you're actually working with
Yeah.
one group of that I sent
I
to you,
am,
but
yeah, yeah.
yeah,
First time home
so
buyer. So as a child, I immigrated to Canada when I was 10. For the first, I think, 10 years of our life, we were always renting. As far as I was living at home, we were
yeah,
always renting. So I see the troubles that a lot of people have, not just the people that are here, but people coming in trying to build a life. Home ownership is something that seems very impossible in a lot of other countries, right? In other countries, like where I'm from, we don't have a mortgage, right? You have to pay cash to buy the home. So home ownership, that's why a lot of people that come, the first thing you want to do is settle in, buy a home. Nothing makes you work harder than having to make those mortgage payments. I'll tell you that much, right? So I've been there. I know I was a first time home buyer myself, and I didn't have a lot of help when I was doing mine, and you know, I got screwed in some areas, so I understand all the troubles.
yeah,
Yeah, I'll say it. it wasn't the best experience, particularly because I had no one to hold my hand and say, hey, it's gonna be okay.
Yeah.
You know, you're going through a tough time right now with this, and these things didn't work out. So I always try to be that person because I was there, I was in their shoes.
Mhm.
Everyone has different experiences, but at some point, you know, you do hit a spot where you're like, I need someone to explain things to me, hold my hand, and walk me through that process. So I take extra care, and I take as long as it takes with my first time home buyers. Usually, I do like 15-minute phone calls. When it's a first time home buyer, I leave it open because I'm like, this conversation could be 20 minutes, or like the last one I had was
Yeah.
like 45 minutes,
Yeah.
right? And I can talk and you know, sometimes I over explain something just because I want them to have that information, right? I want them to say, hey, there's reasons why we're going with plan A and not B. And that builds trust. Honestly, like sometimes clients don't always like they sometimes come in with their questions, but they already know some of the information and they're really eager to tell me. And I'm like, that's fantastic. You know, tell me what you know and let me fill in the gaps so that you're confident about your
Mhm.
purchase.
Yeah.
Home is your biggest purchase for most
Yeah.
people, right?
Yeah.
Unless you're buying like hundreds of cars and a plane, right? A home is probably going to be one of your biggest purchases. So if I can take that extra step, walk you through it, make sure you're comfortable and you know exactly what's going on, and make that process, particularly when it comes to closing your mortgage and like getting the keys in hand, if I can make that as smooth as possible for you, I'll go that extra way. Again, you know, doing good service is something that you can't put a number on. It can't be something that can be bought, essentially. Like you can pay for whatever and not get good service. So I don't ever think about it like that. I think about it, if this was me or if this was a family member of mine going through this process, what do they want to see? And that's how I operate my business.
Yeah, and you know, I say this as a realtor, we actually have an ethics course that we have to take. And you know, I chuckle when I have that because I think to myself, you either have ethics or you don't. I don't think you can be taught ethics. I think you
Yeah,
either have it or you don't. And it blows my
yeah,
mind, you know.
yeah. I think
Um,
I think in our industry, particularly like yours and mine, when it comes to finance, sometimes we're hit with challenges where you can sort of go the unethical route. You might be given a fork, and if your thought is ever maybe or maybe not, then I don't think you're an ethical person in general. Right? You should never question your ethics and what's right for the client.
yeah.
So we do get faced with that sort of challenges in our industry a lot, as I'm sure you see. But I always take it upon myself to make sure we're headed in the right direction because who knows who knows what that other direction where that might lead you down the line.
I say, hey, I don't do jail. That's one thing I don't do is jail time.
Well, jail time? No, forget that. I want to be able to put my head on the pillow and not worry about am I gonna, you know, are my clients okay, right?
Yeah, yeah.
Yeah,
Anyways, let me ask you, moving on.
yeah.
I know we've been talking for a while. So moving on, let me ask you to give us maybe some insights and tips on if someone has a renewal mortgage.
Okay. So renewal. That's a big topic right now. Of course, a lot of people when they're buying right now, they know what the numbers are. The thing with the renewal is, I'm sure you've heard of the term saying payment shock,
Hmm.
right? That word's being thrown around. That's because there were basically there's a lot of people that were having fixed mortgages, whether it was a 3 year or 5 year. They're coming up due this year and next year, right? There were a lot of variable clients who are in the same boat. Some variable payments were going up, so those people they kind of fluctuate. There's two types of variable payments
Hmm.
for layman terms. There's ones where the payments stay the same, but the portion of how much you're putting into your principal versus interest changes as the years go by. When interest rates got increased, what they did was you're paying very little bit into your principal if your payments stayed the same, but they were just increasing the amortization of the back end. And we saw cases where amortizations were like 50, 60 years, and the clients were not even aware of it. When you're coming up to do a renewal, all of that would get reset to some degree, and you're looking at rates that are happening today, which could be 3, 4, 5% higher than what you have right now. So you may not even know the true cost of the current ownership right now until you renew. So if you do have a renewal coming up, first thing I tell you is your bank's are supposed to be calling you or sending you letters about 6 months to 3 months in advance. And their first prerogative is to get you to re-sign with them as quickly as possible. One, to make it easier to know they can count on that guaranteed business. And oftentimes it's whatever rate they have available. There's ways where you can push back on that. Or wait. We are in a descending market where rates are going down. If your renewal is in October, November, reach out to a mortgage broker and have a look at what's the current market rates that are happening right now and compare that to whatever your bank is offering you. You have a little bit of time and wait and kind of see what's coming down the line, right? And don't let them scare you and say, hey, this is a limited time offer. It's going to expire. Sign right away. It's one of their tactics to get you to sign. When you have a renewal coming up, there's tons of things you can do. It's a good time to look at your overall finances to see, hey, is there any debt that I'm paying for that's high interest or higher than my mortgage interest that I want to consolidate and make my payments, pay that off faster, right? Is there other things that I want to purchase? Is there a refinance? Is there any equity I want to take from my property to fix up my basement, to repave my driveway? Other things that are not bills, but you want to have spent money to spend on. So when you have a renewal coming up, it's a good time to look at your overall mortgage. What are the rates you're paying? Can we actually reduce some of that payment right now? Can we reduce some of your payments into your other debts and consolidate that into your mortgage? There's a lot of things that you can do at the time of renewal. So I would highly recommend getting in touch with a mortgage broker just because we have a good understanding of what most of the banks are offering out there. That work with brokers. Is over like 50, 60 different lenders out there. The top 4 or 5 banks, they do work with mortgage brokers. So have a look at what might be coming down the line. And I'll be honest with you, 2 out of the 5 that I've seen this week or last week alone, 2 of the rates were good. 3 of them were not the most competitive. And I told the one of them, nothing, like I don't have to do anything for you. You're not making any changes, but go back to your bank and say you want this rate because that's the competitive rate in the market. They were super happy and they called me back. They got the rate. Again, I was just doing the right thing for the client by telling them to go and get the rate, right? I get to feel good about myself because I did something good for a client, but at the end of the day, it's the right thing for the client, right? That builds more trust with them. So next time they have something, they'll come back to me. Yeah, but renewals right now are really big, right? It's not something that you should be afraid of. The sooner you start to investigate 6 months out, 4 months out, the better off you are because then you can understand what's happening with the rates, with the markets. Are there other banks or other lenders that can offer me something better, or is there any changes that I'd like to make? And then, as you're going, as your renewal is approaching, then you can make a more informed decision and not just make a spur of the moment and just do it right away.
Yeah. Yeah, no, that's good advice. So in today's market for like something that is 500,000 or even 750,
Yeah.
like what would they be looking at for a dollar amount?
Dollar amount. Okay. So if you were looking at it right now, your closing is tomorrow. Well, not tomorrow, but you get what I mean. Your closing is happening
Yeah,
this
yeah.
week, right? The best rates right now, give or take, and I'm taking an average because some are higher, some are lower. It's around 5%, 4.99, right? For 500,000, you're looking at, if your mortgage is $500,000, you're looking at about a $2,700 payment right now, and for $1 million, around 5,400. So 5 to 7 to $1 million bucks, you're looking at about maybe 4,500. So it's pretty, it's sliding down, right? So if you are unsure about where and how much you can afford, we can simply just do a quick pre-approval for you based on some of the figures that we have. At least figure out what the payments are, right? And I always say, hey, how much do you pay in rent, right? And that's technically someone else's mortgage. How much are you paying for rent? And this is your mortgage payment, right? Is this something that you can make an adjustment for, right? I always look at it both ways, which helps clients kind of understand, okay, I'm paying this. I'm paying like $2,500 for rent. But if I buy my own condo, I'll be paying $2,600 in mortgages, small, property taxes or condo fees. But it's still something mine, and I'm building that the value in the asset. If I ever need to take equity out or sell it, it's almost like a savings vehicle for me.
Yeah.
right?
No, for sure, for sure.
Yeah,
Yeah.
but those numbers are
And
give
it's
or take.
yours, right? It's
Yeah,
yours.
that's those are based on the current 3-year average rates, right? 3-year
Mm.
fixed and 30 years amortization. So those are the numbers, right? So if if you like to have the exact payments sort of understood for the next 3 years, I would do a 3-year fix. If you're a little bit more open and you kind of want to see where the market's going and you want to kind of, you like, you know what, I want to kind of write it down. Variables also becoming a little bit more appealing. Obviously, given that if Bank of Canada reduces the rates, it becomes a little bit more appealing. If you can get a good discount off of your variable, it might be something to consider.
Yeah. Yeah, for sure. So first time home buyers,
Yes.
let's talk about them because it's a at the tail end of the day, while my niche is downsizers and seniors, and I do a lot of that. I also do a lot of first time home
Yeah.
buyer work.
Yeah.
And, you know, um, I mean, the service level that I offer is uncanny because I know once they buy with me, they will come back. It's that repeat
Yeah.
business, right? And
Yeah.
that's what you're
Yeah.
earning.
Same.
The first
It's the
buy
same
is
with
the
us.
first buy. Yeah. But they also they mean a lot to me because while I love helping seniors and it's so amazing that I get to, you know, uh, walk them through probably their last purchase or someone who's downsizing, and I can help them with a lot of the empty nesters or the whole 9 yards. The first time home buyers is has I have a soft spot for them, right? I mean, we were all there. I came, I was a immigrant, I came here, and so I feel like it's it's just it's a different level of excitement. I'm like so over the
Yeah.
moon when they buy and they're able to get through.
Yeah.
And it's unfortunate because over time it's getting harder for professional women to really be able to own their own space. Like I for a while then I used to deal with a lot of single professional women who we could get into the market even with less than 100,000. You know what I mean? But nowadays it's so much harder. But that doesn't stop us. That doesn't stop us from finding ways to work on. But tell us a little bit about insights and what tips you can give
Yeah.
them.
So first time home buyers, I have a soft spot for them as well. First experience really does build like me. It always stuck with me, my experience and how how differently I wish it had gone, right? I always have a soft spot for them. And you sort of I find that I take on the troubles a little bit more. So when they're they have their heart set on a house, and if their bid doesn't go well or they don't qualify, it sort of bothers me a little bit more. Particularly because a lot of my first time home buyer clients right now are children of my other clients, right?
Oh
So
yeah, yeah,
you
yeah,
know,
yeah, yeah.
there's a little bit more weight when it's like a referral and it's a first time home buyer. So I always spend a little bit more time with them. As I said, I explain things to them a little bit further, the whole process. Like, okay, what does it mean from the minute you and I talk all the way to when you get your keys handed to you? What's kind of the process? And then, when are you guys building? So I find a lot of times first time home buyers are coming to me, and sometimes it's a little bit further in the conversation and they should have come to me a little bit earlier. So some people are like, I want to buy a house, right? What's the first step? Let's look at our finances, right? Without the finances, without the money part, without the mortgage, you're not realistically going to own a home. So let's look at that and don't do it. If you want to buy a home and you want to move in there in August, don't come to me in July, right? Come maybe 6 months in advance. Maybe you have your credit bureau or your credit history that has to be, tuned up.
Tidy up.
Sometimes it can just take a couple of months. Sometimes it takes longer. I've had a case where there was something that they weren't aware of in their credit bureau, and in our discovery, it came to light. And because of that, their plan had to be shifted. It wasn't a complete wreck, but we went from having it for 4 months down to 6, 8 to 12 months down the line. It could still happen. So a lot of times, start ahead, start to accumulate your down payment, and have a good idea about where it's coming from altogether, right? Whether if it's your own savings, if it's coming in from investments, if it's coming from outside the country, depending on like which country, where, and who, and how. Um, you should really be aware of some of the regulations that exist in Canada when it comes to just transferring money altogether.
Hmm.
As somebody who spent so many years in AML and in banking, right, we have a good idea about it. Some countries are prohibited, some countries are there, but they're just different methods. If you're getting a gift from a family member in Canada, how does it work? Do all lenders accept it? Is there limitations? So there's so many little things that those questions, if you just, if you spend ahead of time covering, then they're going to alleviate some of your headache down the line, and sometimes it can cost you a little bit more, right?
Hmm.
And always do your pre-approval. Okay, doing your pre-approval can
Yeah.
make a difference with, do I put down 5% or do I have to put down 20%,
Yeah.
right? And some of that, it has its own regulations. Some of it is based on your application specifically, right? And not every two people are alike. Not every two people are going to get sometimes the same rates. Not every two applications are the same. So the sooner you start, the sooner you can actually have a plan that's in place. And oftentimes I find, like, when I work with a first-time home buyer, we can shave their time down by maybe almost a few months. So if you're planning for next year, maybe I can help you shave that down into 6 months so you can move into a home sooner, right?
Yeah. Yeah.
But give yourself every opportunity to succeed, and you can't do that by doing last minute things.
Yeah, and I say to people, it's great when you have a plan in place. So even if you are planning for next year, but you have a plan in place, it makes a big difference. Even like understanding that, you may be using your RRSPs because, that amount has increased drastically for both people,
Yeah,
but it has to be in that RRSP account for X amount of days before it can come
yeah,
out, right? And knowing that,
yeah,
because sometimes people don't really realize that piece until you trip on it, right? Like, or like, because they think they don't think to ask, or they don't think to tell you, or whatever. Like, I think it's
yeah,
important for them, for people to know those things at least by, and the more transparent you are, I think
yeah.
that's where you'll get.
I think the down payment piece is really key. That's I'll tell you, that's one
Yeah.
area that bottlenecks for me. It's a huge, it can be a huge source of headache, is because people are like, oh, I have the money, but I'm like, okay, where is it? How is it? It's, oh, I have an RSP. Well, RSPs, there's specific forms you got to sign. There's timing. Are you aware that you could do like TFSA, FHSA? A lot of people are not even
Yeah.
aware they could take
Yeah.
money from FHSA. What that new
Yeah.
the new
Yeah.
account is,
Yeah.
how it works. A lot of people are not aware that if you borrow money for your down payment, right, those numbers have to go into calculations. So if you have a line of credit, it's coming from that.
Yeah.
Well, guess what? That has to go back into your calculation ahead of time. So it can change a lot of things. So just knowing a solid plan ahead of time can help you so much. I can't tell you how many hours or how much money clients have saved by just having a plan ahead where they're not scrambling last minute.
Yeah, no, for sure. So we're gonna wrap up because we've been talking for a while. I didn't
Yeah,
realize that
yeah.
time just
Oh,
goes by I guess when you're
and
having
I'm
fun.
holding back too. There's so
Yeah.
much more I could share, but
So we're gonna have to
uh,
do another show then.
oh,
Let's do one
oh
after,
no. Yeah,
yeah, for sure. But the one just in wrapping up,
yeah.
I don't see any questions, so I invite people to drop questions either at Jay Watson Homes or at mortgage.manny. You can go directly to mortgage.manny and ask your questions if you have some and you don't feel like you want to ask it in this forum.
Yeah,
Um, we will do another follow-up show
absolutely.
for all of you
Yeah.
watching. So pay attention and join us because we appreciate it. But as we wrap up, maybe what's one thing that you want to tell people, and then we'll get into your contact and how they can reach you.
Yeah. Well, honestly, definitely give me a call or ask me questions. I don't necessarily have to work for you. I'm happy to answer questions, but engage with me. If it's I said something here that you disagree with, challenge me on it. Call me, message me, talk to me. I love having conversations with people. And for me, it's if the more people that are talking, the more I think our industry is going to move forward. So I'm happy to converse. If it's not about mortgages, I'm a huge soccer fan. Anybody's out there, but out there, there's other hobbies that I have. But Definitely, if you can't tell, I love to talk. So give me a shout and we'll talk about whatever specific issues that you have or questions that you have.
Perfect. How can they reach you?
So, best way to reach me is by sending me a text message or WhatsApp at 416-399-1993 or DMing me. All my contact information is on IG. If you go on my webpage, you guys can email me at manny@northpowermortgages.ca. But the best way is to give me a call so we can talk. And I find a lot of times just a conversation just uh, gets rid of any miscommunication. You know, when you're emailing back and forth or
Mhm.
texting back and forth, it's sometimes too much to be said. So give me a shout. No obligation. Even if you want to use me as a secondary option, just to review what you currently already have, more than happy to provide services or give you my honest opinion.
Perfect. So I appreciate your time. Thank you so much. I really do appreciate your time. I appreciate the help you give to my clients because um, it's important. You do take a lot of time with them, so thank you for that. And for all of you watching, my name is Jacqueline Watson. I'm a realtor with Sutton Group Tower in Toronto. So you have real estate questions, feel free to reach out. Um, thank you. Thank you, Elizabeth. Elizabetta.
Yeah, thank you.
She
I love
says,
having the
great
conversation.
conversations. Thank you so much. And
Absolutely.
I appreciate you joining. Like, I appreciate all of the viewers, the time you take during your dinner hour to join us for this. It's really, it's amazing. So thank you so much for joining and participating. If you have a question or a topic you'd like me to unpack further, please feel free at any point to drop me a message. And if you're not following me, let's follow each other. Let's make new connections. I truly believe that while Instagram is a space, what we have is a community, right? The more people that join us, the more we can help each other grow, but also kind of be a good connection for each other,
Absolutely.
right? Like if, yeah. So I mean, I have so many businesses that I've connected with over time. If you go to my YouTube channel, you'll see that I have those videos there. And I do business with them because they're good people. And, why not, right? Let's grow each other. So thank you again so much for your time, Manny. I really appreciate it. And for all of you watching, until next
Thank
time, we'll talk soon.
you. Take care.
Bye.
Thanks, Jacqueline.
Bye.
Bye.
Sorry, PT Realty was somebody just joined. I'm so sorry. We are leaving.